Let's just briefly touch on the the retirement dream that a lot of Bitcoiner have. How do you look at Bitcoin retirement, and how you kind of want to pursue the freedom of time, and the having not a lot of wealth but having a lot of time on your hand, which is actually the biggest wealth that you can possibly have.
Yeah, that's been my belief long before Bitcoin, and that's partly why I'm in a sense ahead of a lot of Bitcoiners. I had already accumulated not a huge amount of wealth, but my entire life since I was 30 years old, I'm 66, so more than half my life, I've really been just trying to keep what I'd already made as far as purchasing value. I've known this all my life that as Saylor called it, the capital becomes a melting ice cube, the value, and so basically I stayed in the game as far as doing business to maintain a wealth, a certain level of purchasing power of money that I had already accumulated. And then I continued to accumulate more because it kept melting. But as soon as I found Bitcoin, it changed the game. I understood it very quickly. And people are like, not from the technical side. I'm pretty good at understanding tech, but I've been around since tech was invented before computers. So I've been through the whole evolution. And so there's a lot of things that I already had in my lifestyle. I never really joined the 9 to 5. I mean, I had businesses. I had multiple businesses, and we did open at 9 to 5. But I was there at 5 in the morning. I would leave at 2 or 3 in the afternoon. I would windsurf, surf, kayak. I did outdoor sports even on a business day. I mean, I worked 7 days a week for 5 years, and yet I surfed and skied and did all the. And how do you do that and work? Because I work even the days I play. It's like I don't have that schedule. Now, meetings, what we brought up, the time constraints. I used to have meetings every 15, 20 minutes. I mean, literally line up 20, 30 meetings a day because of the businesses I ran. It took a lot of, meetings and management and talking with people. And I was one of those people, if you're late 5 minutes, your meeting's over. I mean, it's like I was very and a very American in that sense. I was raised to be on time. I'm either early or if I'm late, something happened. It just doesn't, I mean, ever. My father taught me that a long time ago. And there's an old saying about time and being on time. It's the courtesy of kings. The punishment used to be lose your head. But the point is, it's out of respect that if you want to be treated well, you treat others well and you don't steal their time. And by being late, you're robbing the time of other people as they sit there and wait for you. So I have a great deal of respect to keep things on time. At the same time, I live in Mexico. When I moved down here, yes, you definitely have a different attitude about time. If a Mexican shows up on the same day as the appointment, he figures he's on time. I mean, and they laugh, but they'll go, that's true. I mean, they really just kind of chuckle about it. And it's like, there's island time in Hawaii. Well, I live on a 3-sided peninsula, 1,000 miles long. It's pretty much like an island. And so the Paseños is the people of La Paz, which means peaceful people. The city of peace, and the people are very peaceful. They always say muy tranquilo, very tranquil, and they're very laid back. And so, yes, I have that beauty of my life. And even when I was running all these businesses, I could after 5 years, I took 5 years off in a sense, but I never quit. It's like I still invested in stocks. I still, traded things. I had properties. I did something to generate income. But it wasn't like I worked because I had to work, and I worked because I wanted to work. That's a big difference. And back to the freedom of time, I work when I want to work. How many people can say that? They can't. And in many professions, you can't just do that. But I created businesses that would pay for my lifestyle and allow me to have the lifestyle I wanted. And that's one of the tricks that I learned a long time ago from my father was you don't want to make huge incomes. You want to make big companies that great profits, and then you take some of that. But anytime you take the profit, you're paying an income tax. And so how do you avoid that? Well, your business pays for your lifestyle. If it's paying for your travel and it's paying for it legally, I mean, legitimately, you're doing business travel. Like we go on a ski trip, but we had to do business the first day and the last day of the trip. So flying up there in our private plane was paid for by the business. The time we were there the first night, the hotel in the city, for instance, that's paid for by business. The next week of skiing is all paid for personally, but the flight home, because it was a business trip, is also paid, you see. So there's like part of it, my father would go, yeah, it costs a lot to go skiing, but it didn't all come out of my pocket. And it's totally legitimate. This is all, you have to record everything and properly document your travel and things like that to get these kinds of use these expenses. But this is how you reduce the profit. And my father used to say, yeah, I make $40,000 a year. Well, as I got older, I was like, $40,000 a year? How do you do that and have an airplane and a house? And I'm starting to learn what value of things were when I was 11 and 12 years old. I'm like, $40,000 isn't that much. Yeah. Well, it goes, well, it is for food and wine. Like, what else do I got to pay for? Every time I travel, the business that covers, it's like, oh, and I go, oh, so you don't, and I said something about owning an airplane. He goes, I don't own an airplane. And at one point he had two of them. And what do you mean, do I own an airplane? Well, the business owns the airplane. And he just happens to own the business, and he happens to be the only pilot until I came along. And you see, this is, when I became a pilot, he allowed me to fly the business plane because for business, it did, that's where I got my hours. But it was like, it was not really, I didn't get paid to fly. I was lucky to be able to fly the airplanes I was able to fly at a very young age. But these are the kinds of things that richer people figure out ways to have their lifestyle paid for. And so back to the time constraints, I don't have them as much. And it also, with Bitcoin, changes your time preference if you allow it. Not everybody gets changed by Bitcoin, but many people start to realize you're not on the grind anymore. If the money isn't melting, the asset is actually increasing, your value is at least keeping up with the purchasing power, that grind is over, in the sense that you don't have to keep busting butt like that. Right now, because of Bitcoin, for young people, all I can say is work hard, live cheap, and stack sats. The faster you do this, the quicker you accumulate Bitcoin, and the longer you hodl. If you go past 5 years, get up to 10 years, you're probably retiring. Not in 30 years, not in 20 years or 40 years. You're literally comfortably retiring in 10. That's never been possible anywhere in the world, that you could do it just by hodling. See, and I have this conversation all the time with Bitcoiners, OGs, traders. They'll tell me, well, I'm trading because I need to make more Bitcoin. Yeah, but you got to beat Bitcoin's compound annual growth rate, the CAGR. And they go, well, I know, and I go, are you doing, tax after taxes, after all the work you do, are you making more than 20% a year? Bitcoin's doing better than that. You see, and the beauty of what I did, and this is where I go on and on, I know, but I just come up with these ideas. What explains it, demonstrates what I'm talking about. I actually bought into Bitcoin when Bitcoin was $2,500 a Bitcoin and gold was $2,500 an ounce. I traded 10 ounces for 10 Bitcoin. Now, I've told people this story many times, and I'm not like, oh, I don't have them. Most of them I've used to live. It's in my retirement. It's what I live on. But the point is that Bitcoin, and you look at gold now, it still hasn't doubled from 2,500. It hasn't hit 5,000. Yet gold to Bitcoin is at 16.5 today. It's actually 17 almost. Well, it was down as low as 12, 14. It's been as high as 40 to ounce. There was a time when I actually almost 50x'd. Okay. So, and it's going to go back there. So it's just a matter of time. It's not a matter of me working. So when I look at the fact that I've been in Bitcoin since 2017, so that's going on 9 years, to have something that's gone 15x, and that's the low end, that it's actually above that today, but let's just say 15x, there's nothing else I could have done. I mean, I've had properties, I've done rentals, I've had businesses. There's nothing after taxes that I would have, with all the work, that I could even beat, and here I'm able to beat it without doing anything but holding the Bitcoin. So
It's such an interesting thing. Once you get Bitcoin, you're like, okay, this is like a fast track almost to, like you get a lot faster to your retirement goals than you would use like euros or dollars. That's for sure. But even other assets, like it's really hard to outperform Bitcoin. How do you actually, like, now that we're talking about other assets, how do you look at Stretch, for example? I know a lot of Bitcoiners that are close to or already in retirement like the Stretch thing. It doesn't do the performance Bitcoin does, but it has some kind of income component automatically to it. How do you look at that product, especially for Bitcoin retirement?
Still, it is third-party risk. Yeah, that's always the case. I'm glad to be out of the stock market. I'm glad to be out of properties. I'm glad to be out of all these things that I had to have permission to do and to get my money. I've been there when I want to liquidate. I was there in .coms. I was there with stock investing. When you go to liquidate, you made all this money, but you can't get it. Same thing that happens to a lot of the shitcoinery, or the casino coins, as I call them. People are gambling. Well, gamble away. Stretch is a gamble. It's a gamble, even though it's, not so bad as maybe just gambling on a casino. It's still gambling in the sense that you're not only gambling to make more, you're hoping that you get an income out, but you've got to be sure you can get it out. Now, in the case of Stretch, if you're not able to, well, there's a lot worse problems in the world than if that happens. So Stretch is fairly safe in the sense of, to make that investment. But again, you're going to have to beat the CAGR if you want to, do that. I get the fact that people want an income. I'm looking at for retirement product that's probably going to come out. I've talked to OGs that are working on it actually, and people in Wall Street that are trying to create this. But I can see a retirement style annuities being created where Bitcoin is. You put up your Bitcoin, you lock it up, 10 Bitcoin, 5 Bitcoin, whatever, and you get paid an income that is tax free based on that. And that's basically, it's like a bond, but it's done as an annuity. These are many, the annuities are sold all the time for retirement accounts. And it's a way to, my mother had one. And when she passed, we would get what was left of it. But she was able to get a tax-free income off of that annuity for many, many years and remain retired. And so, you don't use up the wealth. That's the whole trick. So the thing about big borrowing against it, it's a sense of annuities allowed you to steal from the future. So instead of waiting for the future gains, you get some of it. That's what Stretches in a sense doing. Instead of getting the bigger gain, you get income now. And I understand that. But again, are you going to take that income and go buy Bitcoin? Or are you just taking that income so you don't have to sell your Bitcoin? And this is where the annuities come in, I believe, because you can run an annuity in the future. And this is what's coming is you don't need third parties. You don't need Wall Street. You don't need brokers to do this stuff. We all use them. This is how the system is. That's how it's rigged. It really, this is why I'm glad to be out of it. Because the reality is it's not an even playing field. If you're not a high net worth individual, you don't get all the internet. I mean, all the stocks. You can't do IPOs. You can't do, a lot of things that happen are not offered to you because you're not wealthy enough. And that's to me that's a rigged game. And it really is rigged. I mean, if you know about high speed trading and nano trading, all that, it's a game that, yes, you can win at it, but it's just like going to Vegas and winning. My father taught me a long time ago when I was a kid, Las Vegas is built by losers. Think about it. Where's all the money come from? People that lost it to the casinos. Okay. And they're professionals at extracting it from you. So if you think you're going to beat the house at their game, not unless you're really a pro gambler. And even if you talk to the pro gamblers, they're going to tell you the game's rigged. They've been kicked out of casinos when they win a lot. There's a lot of that goes on. And there's a guy that's a very famous poker player. He's all tatted up. I forget his name, but he exposes a lot of this, how they've kicked him out of casinos because he's winning, not cheating, just winning. And it's like, no, you're winning too much, and
It is crazy because they have to play this game to, like, obviously, like, it's very logical, like everyone gets it. Like if the casino would lose money, there wouldn't be any casinos. So like that's like a very easy thing to think about. But they have to strike the balance to make enough people win so they can talk a little bit about it, and they spread it a little bit so people are coming and doing it, but like not enough so they are losing money.
yeah. And it's the same thing they do in the stock market. They feed you enough gains that is worth being in it, but they're staking so much as a third party. If you look at mutual funds back in the 80s or 90s when they came out with them, and my brother even brought one to my mom, and he was a broker, and I said, come on. You can't be doing that to mom. I mean, the annuity he came up with was a good idea, but when I saw the mutual fund, I said, this is absurd. He says, why? I says, you're recommending it because your company recommends it. But the reality is your company has management fees. Oh, but it's only this amount. Run the numbers, bro. And that he hated it when I'd say, because I'm the young kid. I don't know anything. I go run the numbers. Because what happens with this little tiny compounded commission that they have, it adds up. And when you get done with 20 years, you realize these sons of bitches did nothing and they're getting 40% of the gains because of management fees. And they say, oh, it's only 0.3% or, less than a percent or, some small percentage, 2%, but it adds up. And when you see how it adds up, you're like, this isn't right. And I tell my mom, I go, you could just invest in the S&P or just invest in Q for NASDAQ. In other words, invest in an index fund. You'll do better than the mutual fund and not pay any commissions. You don't need the third party. All Wall Street is third parties. It's like casinos. This is why they have laws about gambling, because if everybody could have a poker game in their house, they wouldn't be going to casinos to lose so badly. It's not a rigged game. It's hard to rig a game in a house. I mean, it's like, so yeah, the unfair playing field is something that is a real issue. And
Is this the same way with real estate properties? Because like when you buy a real estate property, most people can't buy it with cash, so they go in like a mortgage situation, like a credit or financing thing, where they go 20, 30. I mean, I already heard 35 years also. And I made the calculations. If you even have a really good interest rate of like 3, 4% and go for like 30, 35 years, most of the money goes to the bank. Like 50% of the money goes to like buying the home, and 50% of the money goes to the bank and the lawyers and the system, which I'm like, people are not aware of that. They don't know like the house they buy, like 50% they just like write a check to the bank, and they're working 50% of the time for the bank, and other half they're working for, yeah, their own home.
Well, and I did finance real estate in the beginning, and I'd buy it that way. It's the only way I could, and I leveraged, and I buy homes that I would fix up and then flip, and that worked, and I was able to beat the system, so to speak. I'd make something out of it, and it wasn't like as rigged as it is today. But getting loans and whatnot wasn't easy, especially cheap loans, to be able to do what you want. So it's one of those things that to get in the game, you've got to get started. And what happens is, like, if you owe a bank several $100,000, it's a problem. If you owe them 100 million, oh, it's not a problem at all. They'll loan you more. It's the silliest thing. But Grant Cardone talks about this very openly, and this is the part that, if you're listening closely, yes, he can get loans, he can keep borrowing money. They love guys like him, because once you're on that side of taking big, huge loans, like Elon's done, and pay them back, they just want you to keep doing it. But if you're get yourself in trouble, you're so big you can't fail. They'll help you out of it. They won't help you out when you're a small guy. They're just going to take your property, they make the foreclosure. It doesn't pay them to do that with bigger investments. So the old size of "you're too big to fail" type of thing, well, that's not a fair game. There's all these things that go on in business and whatnot with the governments, subsidizing, helping out. Right now, they're busting the cartel of the beef cartel, evidently, of America, which has been obvious. Now they're in Congress saying, "Oh, geez, we have four, companies that are running the whole thing, and a lot of them are foreign owned. This is national security time. It's antitrust laws. It's like, of course, it's a monopoly. It's a cartel." I live in Mexico, and everybody attacks me because of drug cartels. I go, yeah, we have drug cartels. We have corrupt politicians. But as the politicians will tell you, we're honestly corrupt. They don't, I mean, around Mexico, they just honestly, yeah, 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 that's the way it works. And you're like, but in America, it's actually worse because they've hidden it so well. And you're finding out now, your own Congress, your own politicians, they're stealing, literally just stealing money and scamming all the time. And it's because of the incentive. They've been incentivized to do so. Lobbyists come in and pay them, and they write the bills and they approve things. And all this is done without political process. The method that was supposed to be, according to the founding forefathers of our, to create the Constitution, it's all been circumvented into this game. And it's, here in Mexico, it's a very obvious circumvent, that we jokingly say that it's a narco state, in the sense that the cartels are basically running the Congress of the Mexico, and locally in many places, most places. But they're businessmen too. They're becoming less oriented towards the drugs and more towards, they got to make money because of what Trump is doing. So, there's pressures on them, and there's pressures on the president right now of Mexico to clean it up, and she's not doing that. And so basically they're making her look very bad globally.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.